the house price construction starting to go up again if we don't have the right skills, because demand will exceed supply and then house prices come under pressure. So that's what we can foresee in 12-24 months.
The Economic Reform Roundtable has put planning reforms on the agenda to increase the pace of home building. In your view, what needs tackling?
Yeah, firstly, we're encouraged by the conversation happening at the around productivity at the roundtable. We think we need a multifaceted approach to deliver more affordably priced homes. Clearly, the planning system at the state level needs reform and to accelerate housing approvals, including at local council level, where we need more resources and more support for councils who are approving things quickly, but also some repercussions where things take a long time. So planning's a big lever we can pull, but there are others. EPBC approval timelines have extended out. There's tens of thousands of lots that could be brought to the market if that was expedited. And, even though the construction, the housing market slowed last couple of years, it's starting to accelerate, which means we need more skills, particularly in home building. And, we can train through the TAFEs and apprentices, but we also need to have some targeted immigration to build the homes that are coming through.
Well, the government is looking at reforms to the Environmental Protection and Biodiversity Conservation Act. How key is removing duplication across jurisdictions?
Well, firstly, we need strong environmental protection and strong regulation to make sure that development and nature are balanced. But it's the timelines that build a lot of uncertainty, and at the moment they have extended way beyond what the normal timelines would be. We've got in Queensland, just in our pipeline, Southeast Queensland, about 7 projects that have been there for a prolonged period of time in the approval pipeline. So just accelerating approvals where the due diligence has been completed would be a big benefit.
In Queensland, environmental activists are opposing your proposed Springview village development, which they claim would see 167 hectares of the Wagaru forest cleared for housing. Where are you on that? And how can we fast-track housing while protecting the natural environment?
Yeah, Alicia, on that project is in the application process with the EPBC, and we're waiting for their decision on that. But in the way that we have put up proposals for that community, we have been very careful to make sure there are corridors and there's balance between housing development and what nature and the the vegetation that is protected. But at the end, we will be guided by the decision of the EPBC.
Well, you've flagged a skills shortage as a big issue. What do you make of the indications the government could freeze changes to the National Construction Code to speed up housing approvals?
Yeah, we have noted the conversation on the construction code. Good reform, good regulation that makes better quality homes and consistency across the nation. We welcome that. But if it adds unwelcome cost at a time where productivity is so challenged, affordability is so challenged, we need to take account of that. And as you know, across the country, our first home buyers are, they've had some easing of affordability due to interest rate cuts, but affordability is still a key challenge. So we've got to balance that over time, not adding undue cost to the cost of production. But we have just on that over the last 12 to 18 months seen in home building and civil construction, the construction escalation come down, which is welcome because that's being passed through to the consumers in terms of lower cost of production. But I do have concerns that as the housing cycle picks up, with the cyclical recovery that is starting to be underway, we may have again bottlenecks of skills and skilled workforce to deliver the homes that are required. So continuing to attack that is important. Otherwise, prices will rise again beyond what we want them to.
So what you're saying is the cost of building is coming down, but there's a risk that building costs could return to those post-COVID levels.
Yeah, the prices haven't come down. The rate of growth has moderated. We're seeing across our civil construction and home building categories escalation of around 2 to 3% across the country. So that's in line with inflation. So they're not coming down, but at least they've moderated, whereas a couple of years ago they were up at 20% per annum growth. So what we don't want is that inflationary, the house price construction starting to go up again if we don't have the right skills, because demand will exceed supply and then house prices come under pressure. So that's what we can foresee in 12, 24 months unless we continuing to build, bringing more workers into the construction space.
It sounds like a shortage of skilled builders is a really key issue for you.
I think it's for all forms of property, real estate. As I said, at the moment, last 12 months, the market is more in equilibrium, at least at the smaller scale of building. We do have issues in the more larger scale projects where there isn't enough workforce and skills available. So it's something that is an issue, and we need to address it if we're going to deliver on the target of 1.2 million homes over the 5 years.
Is the rate cutting cycle driving demand, and are house prices also picking up?
So firstly, it's encouraging to see now all parts of the country where we operate, demand is starting to pick up. We saw a real, a momentum starting to build after the second interest rate cut. Clearly, house prices are very strongly correlated to interest rates. And the state that was lagging behind, which is Victoria, started to move over the last few weeks since the second rate cut. So that is welcome. We are seeing more volumes coming through. Our inquiries in month of July compared to June were up 50%. And this year we are guiding to a substantial increase in delivery of homes across our pipeline. Last year we delivered 7,000 homes. This year we're budgeting to do around 9,000 homes. So we are playing our part in supplying more affordably priced homes for Australians. That demand cycle is definitely starting to pick up as affordability improves with lower interest rates and also the lower construction, the rate of growth of construction costs that I mentioned before.
What's the risk? As interest rates come down, prices will become out of reach?
It really have to look at individual markets where there's bottlenecks starting to emerge. At the moment, it's reasonably well balanced. We have seen some parts of the Perth market and southeast Queensland come under builders have limited resources, so that's where the timelines are getting prolonged. So hence why that focus on supply chains and productivity. So as long as we can keep that flowing, then we can keep a lid on prices.
You mentioned Victoria. What's driving a pickup in that state? Is it first home buyers or is it investors?
It's a bit of both. We have seen first home buyers starting to come back in the market, but the initial demand has come from investors. Victoria has screened very attractive compared to the other states because it was lagging on the housing recovery. It was very affordable. We had called that out in our first half result, and we had started to increase production in anticipation of a potential recovery. That is starting to take shape. It's not all across Melbourne. The southeast of Melbourne, the north is getting robust demand, but on the western side, where there's a lot of supply still, there is still softness in that market. So it's not uniform, but it's encouraging to see our largest greenfield market, which is Melbourne and Victoria, starting to show some positive signs.
In your master plan communities, have you had to change your offer to meet the market?
Yeah, definitely. That's been a feature over the last 2 to 3 years across our pipeline. And to give you some statistics on it, our national average 2 to 3 years ago per lot was around 300 to 400 per square meter. Today it's tracking more around 330 per square meter lot. So definitely we've remixed our product to more affordably priced, smaller lots that the first home buyers can afford to get into the market. They're still very substantial homes. They're beautifully created by our builders, but it's just at a more affordable price point. And that's where we're still seeing the bulk of demand is in the townhomes to the standard sort of 300 to 350 square meter, 3-bedroom plus 2-car home. That's where the bulk of the demand is because it's more affordable. And affordability is improving, definitely, but it is still in Sydney very challenged. In the other states, it's more starting to reach equilibrium levels, but still at the upper end of what we would like to see. So if there's further interest rate cuts, that will definitely improve affordability better.
It was a big profit result this year. What do you put it down to?
Yeah, number of factors. We've been executing on our strategy in a very disciplined way over the last 3 to 4 years, and we're starting to see that come through the earnings and the earnings growth. The key contributors to the growth last year was definitely the master plan communities business, including the acquisition we made of the 12 trading projects, so that's contributing in the half. And the other was a significant growth in our capital partnerships with institutional investors, so that drove further growth. And then our logistics business also had strong rental growth. Really core planks of our strategy as we've been pivoting the business over the last 3 to 4 years to residential and logistics markets where we think there are continuing tailwinds and demand.
And can investors expect the same growth in full year 2026?
Yeah, this year we are guiding. We put out our guidance this morning. FFO growth per tax is in the range of 6 to 9% growth on a pretty solid number in FY25. So certainly we are budgeting for growth. We've got, as I mentioned before, step change in production in our land lease communities and master plan communities, where last year we did 7,000 homes. This year we'll do around 9,000 homes. That's what we're budgeting to do. And also our logistics pipeline, the production's going to double. So they're the things that will drive towards the growth, including the scaling of our capital partnerships with institutional investors.
Tarun Gupta, thank you so much.
Great to be here. Thank you, Alicia.